Mortgage crisis. So is our friend Graham Stephan correct about his prediction and his commentary about the upcoming mortgage crisis? Let's go and find out. Hey, what's going on, guys? This is Sam Kwok here, one of the Kwok brothers.
And this is Daniel Kwok, the other half of the Kwok brothers.
And we don't do a whole lot of videos together, so this is going to be one of those videos where we're going to be, commenting and reacting to Graham Stephan's video about the upcoming mortgage crisis. Now, before we dive right in, be sure to subscribe to our YouTube channel if you want more information about how to acquire more cash-flowing rental, as well as how that all fits in with the economy. So let's go and get started. What say you, Graham?
This one all starts with the $2 trillion stimulus package that was just passed. And you guys know the saying, no good deed goes unpunished, right? Well, I mean, in a way, that's kind of like what happened here. This recently passed stimulus package ended up giving significant relief to people and businesses in need of money, funding to hospitals and healthcare workers, and just a myriad of other packages. One of which included the Federal Reserve going and buying mortgage-backed securities, which basically consists of the loans that you take out anytime you go and buy a home. So you think of the word security as another term for investment. And that investment is backed by the homes that they're based off of, so hence mortgage-backed security. So it's basically a way to invest in a whole bunch of mortgages that are tied to people's houses. And banks go and sell these things off to free up some cash and also collect some money up front.
All right, so I'm going to stop it right there.
Yeah, let's go.
So first off, phenomenal fashion this guy has.
Yes.
I can see why he's like
fashion,
the top YouTuber in the world pretty much,
Yeah.
right? So here's a couple problems that I have with what he just said,
Yeah.
right? And I'm sure, again, all respect to Graham, right? I mean, he's got much more subscribers than we do, right? I mean, but I'm sure he did his research.
Yeah.
However, he is a little off on a couple things, just
Yeah.
so far, based on what my research and my interpretation. So he just said that pretty much saying that the mortgage-backed securities, the Fed buying $200 million worth of mortgage-backed securities, because that's how much they bought so far, is part of the $2 trillion CARES Act. That technically isn't true. Because if you're looking at what the Fed did with buying $200 million worth of mortgage-backed securities, right, that technically was what's under monetary policy. What the $2 trillion CARES Act is under what's called fiscal policy. So there's a huge difference, and I recommend you guys do your research on what the differences between is. But technically, when the Federal Reserve bought $200 million worth of mortgage-backed securities, they did it what's known as open market operations. And that is one of the three main ways historically that the Federal Reserve will do to increase the money supply within the central banking system. What the government did with the CARES Act, the $2 trillion CARE Act, is more so under fiscal policy, where the government is looking to put the hands of the consumers directly with the money, right? Without any central banking system, without any, right? Now, granted, a big part of the CARES Act does go to the banks and also the large organizations and corporations, but that is under the assumption, that is under the policy in which that they want people to go back to work, right?
Yeah.
To support the economy as a whole.
Yeah, and just provide my side of the commentary as far as for those who are watching our HELOC videos. When it comes to HELOCs, especially the ones that we use for the strategy, they're non-qualifying mortgages. So a lot of the mortgage-backed securities and these bankers won't buy non-qualifying mortgages and won't securitize them the way that Graham's talking about. The non-QM loans are actually securitized by hedge funds and private investors. A lot of private investors groups will buy non-QM loans, such as a home equity line of credit that we often use. So obviously, the government buying the QM-backed mortgage-backed securities that are QMs, they have to do more with conventional loans and traditional 30-year fix. So that doesn't necessarily affect the home equity line of credit stuff that we talk about.
Yeah.
Okay, let's continue.
Kind of like a commission for basically going and getting you the loan. Like, here's how that works. When you go to get a loan from a bank, let's say to go and buy a mansion, you go and get that $10 million loan, you use that to go and buy the house, and then you pay interest on that loan depending on the terms of the agreement. But the bank where you got the loan just doesn't sit there for 30 years collecting a 3.5% interest rate while you go and pay off your mansion. That would just take way too long for the bank to make their money back and would tie up all of their money. Plus, banks don't have the cash on hand just to give out mortgages every single day, every day to absolutely anyone who just qualifies for one. So instead, the bank...
Yeah, so Graham's right about that. I mean, Graham does, the banks do sell off their mortgages off to mortgage-backed security stuff. But one thing that I want to provide a real quick commentary is that banks actually borrow from the central bank using a line of credit.
Yeah,
that's an interesting fact.
So
right?
it's a credit market, right? It's what the famous Ray Dalio calls the debt crisis, right? That happens every 10 years.
So it's interesting. I'm making this comment because if the banks are borrowing from the central banks using a line of credit, why shouldn't you?
Yeah,
right.
100%.
So let's go and continue.
And now the bank is backed up with all of these loan applications and loans that they can't sell because there are no investors going and willing to buy them. In a way, it's a bit like the bank is constipated. They're backed up with all these loans. They can't get them out.
Yeah, that actually is really funny.
He's a hilarious guy.
Yeah, no, that's actually funny, and that's true. That's the reason why a couple weeks ago we made a video about how the banks just cannot handle the amount of loan applications, especially with the refinance crazy that's going on right now. People have this perception that the interest rates are low because the Federal Reserve dropped their rate. I think he'll later on talk about it. I caught a glimpse of it, when we decided we want to do a react. So,
but then there is also one more layer of complexity with all of this, somewhat on topic of what we've already been talking about. And I've seen a lot of articles lately going and addressing this, and that would be the missed mortgage payments. Part of this relief package includes potential mortgage payment forbearance of up to 180 days, with another possible extension of an additional 180 days beyond that. Meaning
this only applies to residential. This only applies to residential mortgages that are backed by the federal government. So it's not. This isn't anything that's outside. Actually, most mortgages are backed by the federal government now. We're thinking about it, FHA, VA, right? So this only applies to single family to 4-unit. Anything that's multifamily, 5 units and up, there's a special provision in the CARES Act where it says 30 days of forbearance, and then you can request 2 more 30 days of forbearance, so 120 days worth of forbearance according to the CARES Act. So just, for those who are watching, you have multifamily invested or you buy multifamily, 5+ unit or more, that 180 days number is irrelevant. Okay.
First of all, the majority of loans out there are known as what's called conventional conforming loans. This means that the loan conforms to specific guidelines, giving you a better interest rate, making sure you don't borrow too much money, and these types of loans are much easier to sell on the secondary market.
And those guidelines are created by CFPB, which is Consumer Financial Protection Bureau, actually established with the Dodd-Frank Act in 2012. Yeah. So that's the guidelines, by the way, that he's talking about. When it comes to HELOCs, non-QMs, they follow a little bit different guideline. But just needless to say, that's just my comment on that. Okay.
However, where this could affect you is in the short term for anyone who's looking to buy a home, refinance their home, get a loan, or potentially sell their home. That's because if you're in the market to get a home right now, lenders are probably going to be way more strict about who they give a loan to. They're most likely going to want more money down, a higher credit score, lower debt to income, not to mention they might want you to pay a slightly higher interest rate due to everything going on right now. And also given how much demand there is at this point for really cheap money. Now on the bright side, depending on how you look at this also might mean that a large portion of the market out there can't qualify for a loan, meaning you now might have less competition when going and shopping for a house.
So doesn't that mean, Daniel, that owner financing could be an option?
Yeah,
right?
I mean, no, definitely. So if you're wanting to have a more of a competitive edge, and yeah, absolutely, owner financing is absolutely key. It's huge. But I want to make a comment on what he just said right there. And he said the lending is tightening, right?
Yeah.
And the banks are looking to get more liquid. So one of the things that they don't talk about enough on the news, right, or CNBC, whatever it is, they don't talk about the central banking system's requirements in terms of the liquidity that they need to have, right? We call it in monetary policy what's known as a reserve requirement. And recently, they just lowered that reserve requirement from 10%, I believe, lower to somewhere in the 5 range or 7.5 range. I'm not sure, but that right there is a huge indicator that the banks are looking to increase their liquidity. Because, I mean, think about it. If you have $10 and all you need is $10 to borrow $100, but all of a sudden you now only need $5 to get $100, you now can get $200 for $10 instead. Right. So that's a huge deal. It almost doubles the amount of liquidity that the bank can have, and the fact that they're still tightening on top of that, it's very concerning.
Yeah, and so like I said, my original point is this is a phenomenal opportunity, especially if a seller was looking to sell their property when financing was easier, like last year, right? You could have sold the house and got financing, got for the buyer to get financing relatively quickly. Now you're sort of losing options because there's less buyers that are qualifying to buy your home. In the context of real estate investing, if I were a seller selling a property, again, buyers that can't qualify to buy my property, yikes, right? There's less buyer pool, which means that my price might potentially drop.
Right.
Right.
So whenever there's cheap financing available, we all know the prices tend to increase on real estate assets. But, you know, a lot of sellers don't want to sell it for a lower price. You know, a lot of people right now, a lot of sellers right now who own commercial 5 units and up, they want to keep their assets or they want to sell it at a particular price. And we're not that far along into what's known as the downturn, right? Everyone's calling, you know, the recession, depression, right? They're using these words now. We're not quite deep there yet to where sellers realize, you know, it usually isn't about 6 months until after they start realizing, okay, this is where the market is now. But like I said, you know, like Sam said, if you use owner financing, you know, you don't have to go to the bank. You can still offer the same price and still attain the same amount of cash flow.
Right. Both for the seller and the buyer. It's very advantageous to do it that way. So let's continue with listening, Graham. So far, generally, a lot of things he say, I agree.
Yeah,
you know,
very true.
A lot of things that are, you know, very factual. You know, this is something that I respect about Graham. He does his research. Although we're going to provide a react video on his position on paying down your mortgage, which I have a complete separate react video for Graham, why he's wrong, and I'll provide my commentary on that. But let's go and continue with Graham's comment on the upcoming mortgage crisis.
And if you're selling a home, then it might be slightly more difficult to get the asking price for your home, not to mention that there could be fewer buyers out there that would qualify for the loan.
Yeah, we can attest to this because we're selling our home right now, and we listed it literally a couple weeks before this whole coronavirus pandemic, and we had really good showing. Like, we had 6 showings in a day, and then all of a sudden, emergency happened, right? President Trump announces an emergency, like, oh my gosh, like, we need to lock everything down. Ever since then, 0 showing. In fact, our listing agent broker had to temporarily shut the listing down to make sure that we're protecting the general health public, which I actually I found that fascinating with Airbnb. I didn't think about that initially, right? Airbnb hosts owning properties that don't have income because no one's staying at Airbnbs right now.
Right.
Yikes.
Well, the one we owned, well, the one I owned with the other Sam, right?
Right.
The other
bought with
business partner.
cash.
We bought it with cash,
Right.
right? So we don't have a mortgage necessarily, but we've had 9 cancellations so far in just the last 2 weeks.
Just to test that.
You know, I mean, Airbnb, a lot of Airbnb hosts are losing money like crazy left and right.
Big time,
you know, so it is worrisome. But let's finish the video.
Right.
Again, this is just my opinion here, so don't comment down below and be like,
but Graham, you don't know what you're talking about. This is the bear market that I've been saying it's a bear market for 10 years now, and now it's happening, and I'm right. And no other opinion matters. Dislike and sub.
Again, this is just my perspective, and
You know what, though? I do appreciate him doing that because I mean, you have no idea how many people in our comment section, right?
Oh,
well, you
for
do,
sure.
right? Because you run our YouTube channel.
Absolutely.
Yeah, I mean, who are just like, and like, you don't know what you're talking about. And it's just like, all right, well, it's just like, number one, you know, looking at your profile, you have 0 credibility. But I'm not talking about you, right?
Right.
We're talking about other people.
No, this happens to every YouTube channel.
Yeah, every
this
YouTube
happens
channel.
to every YouTube channel. It doesn't matter if it's Graham Stephan, it's us, me, Kevin. You know, plenty of financial channels. Everyone's got their opinion. It's internet. I mean, it's YouTube. Like, you know, you just, for some reason, when you're commenting on YouTube, you just have the Superman cape and you can say whatever you want. So, but no, I agree with Graham on a lot of things right now. So let's continue.
I do feel a little bit safer knowing that if anything is to get that bad, I feel somewhat confident that the Fed would step in and just bail anybody out and just continue printing money and just we wouldn't.
So I don't know how much more the Fed can do here. So I mean, maybe he's confusing. Maybe he's confusing the Fed for again. I think he's confusing maybe monetary policy
and fiscal
for fiscal policy, right? So the government, yes, I mean they're providing the $2 trillion CARES Act stimulus package, but I mean with the Federal Reserve, they're already at 0% interest rate.
Right.
Their balance sheet is at $5.3 trillion right now. Right, and there's rumors of it going to 6, and you see this globally. It's not just the U.S. Federal Reserve. You're seeing it in Euro. You're seeing it in Japan for sure.
Oh, Japan's been
Japan's been in
for a while.
You know,
they had negative interest rates for a long time.
Same with I believe Sweden and a couple other countries. But you know, like I said, I think he's kind of confusing monetary policy with fiscal, which is okay. You know, not your everyday consumer is not going to know the difference between the two.
A lot of times they can be related. There's a strong correlation to how, you know, when law gets passed, certain things has to happen on the monetary side. So, you know, we'll let that slide.
Yeah. Well, usually for those of you guys that don't understand, typically monetary is reactive to fiscal, right? So the fiscal, the people in government, the politicians, they come out with the policy. Right, they have events that happen. They react to an event that happens in the market. And it's just a never-ending cycle, right?
Yeah,
It's the
I know.
consumer market, fiscal, monetary, and just go back and forth and back and forth. So let's wrap this.
So I think largely for most people out there, they're going to be unaffected by this specifically. That's not to say that you shouldn't have any concerns if you own a rental property and your tenant stops paying, or you fall ill or lose your job and can't make your mortgage payments. In situations like that, you should absolutely bring it up to your lender and see if you could seek any forbearance on your mortgage.
Yeah, absolutely. So if you own a rental property and you bought it with an FHA or anything that's federally backed, you have the option for forbearance. If you have a single family up to 4 units, you can get up to 180 days and 180 day additional, so total of 360 days, right? Definitely request for that, especially if your tenant's not paying. That's huge. In fact, there's a nationwide ban on evictions if you have a property that's being financed through a loan program backed by the federal government. You are mandated to not initiate an eviction process, even serving a 5-day notice or a 10-day notice, whatever the day notice that you're required to serve in your state. There's a 120-day ban right now. So I would absolutely call your lender, if it's especially backed by the federal government, to get a forbearance. 5+ unit, you guys got 30 days by default, and then you can request 2 more 30 days, which makes it 120 days total forbearance. So definitely call your lenders if you are struggling to collect rent right now.
But as far as margin liquidity for lenders, I have a feeling it's not really going to make much of a difference for anyone in the short term, as most likely this is going to be resolved in a few weeks to maybe a few months. But hey, you know what? That's just my opinion. It's just what I think based off the research that I've done. And hey, if you come to a different conclusion, let me know down below in the comments. As you guys know, I pretty much read them all. So if you have a differing opinion...
Yeah, I think that he's pretty much done there.
Yeah, so he's pretty much wrapping up. So, well, let me share your overall thoughts, and I'll go.
I think I agree with a lot of things he's saying, but for those who are watching, because you guys love our HELOC videos and rental property videos, when it comes to the federal government buying out these mortgage-backed securities, keep in mind what those mortgage-backed securities contain. They're conforming, conventional, things that are, fit in the guidelines of the federal government. When it comes to the HELOCs, or all-in-one loan, or first lien position HELOC, a lot of them fall into the non-qualifying mortgage category, and a lot of those are sold. They're packaged and sold to hedge funds and big-time investors, so they're not necessarily being affected by whatever's happening on the fiscal side. So don't panic. Like, oh my gosh, like all the banks are going to stop lending HELOCs. This is going to be terrible. Like no more HELOC strategy. What's going on? No. The issue right now is that a lot of people are scared. They're not buying as much of the mortgage-backed security stuff. So again, like Graham, I think we're going to see a little slow down when it comes to the HELOCs getting approved. Loan processing is going to be much slower, from 30-day average to 90-day average. So do expect that when you're going out to get a HELOC. But as far as the rental property side, all I can say is that when it comes to having a rental property backed by a financing offered through a federal government plan or federal government backing plan, be sure to get your phone call in as far as getting a forbearance. If you're not being able to collect rent. I mean, right now we're filming April 2nd, so by now you guys should know who's not paying rent and who is. So now is the time to call your lenders.
Right. Yeah. And well, here's the thing. Here's my overall thoughts on the video as well. First off, really knowledgeable guy.
Yeah, he's
smart.
I
mean, he's a very smart dude. Knows what he's talking about.
Yeah.
And I don't watch him as much as you do. Yeah, I mean, like I don't think I think I watched.
I don't watch him as well as I don't watch him as much as I do. I do a lot of research and see what people are talking about, and then I see what others are talking about, and try to compare some ideas. One thing that again I did a react video about why Graham is wrong about paying off the mortgage. We have a whole separate video for that, so I'll leave that down below when it's ready to go. I think it's still being edited right now, so yeah.
Oh, sorry. I was finishing my overall thought here. But anyways, so yeah, I mean, I've watched like one of other videos, whatever. So, but he's a really smart dude. I really like him. Everything he said was true. Yeah. I mean, I think he kind of misunderstood some lingo and some verbiage, right, and some different policies. But if he is saying that what's going to happen in the future is very similar to what happened in 2008, 2009, I would disagree with that. Just because in 2008, 2009. The whole thing was triggered by mortgage-backed securities and the poor rating agencies that we all know. I think this time around it's going to be bigger, but I think it's going to be more diverse, right? I think from 2002 to 2007, a lot of the predatory lending that caused the recession to happen, it didn't take into account a lot of commercial. Right?
Yeah.
I think this time around we're seeing a lot more over leveraging, a lot more predatory lending when it comes to investment properties. I mean, the amount of interest only loans that I've personally seen the last 4 or 5 years, and these interest only loans are on 120 unit apartment complexes.
Yeah.
I mean, that's insane.
Yeah, and
You
the
know what I mean?
CFPB doesn't cover commercial; it only covers residential. Like,
Right.
Just
exactly.
individual
So we're
consumers.
really, I mean, Graham, what we're talking about is only kind of scratching the surface, right? It's only kind of hitting the tip of the iceberg. But overall, I thought it was a great video. I mean, he's a very sharp guy.
Yeah.
Like I said, a couple tweaks, right? And I'm sure that Graham will go back and make those changes.
Yeah.
Graham, if you're watching, right, we love you. We're a fan, and great stuff, man.
Right, absolutely. So that's pretty much it, guys. So go and leave your thoughts down below. What do you think about our reaction and comments? I know there's a lot of things that we agreed, little things that we disagreed, but go and leave your thoughts below, as well as subscribe to our channel if you want more information about scaling and growing your rental portfolio in times like these when the economy is so weird and upside down. So go and leave those comments, and we'll see you guys in the next video.
See you guys.